Hey, what's going on? This is Adam back with another video. Welcome back if you're subscribed to the channel. And if this is your first time here, thanks for stopping by. I talk about all things real estate on this channel from residential to commercial. If you find value in this content I share, we'd appreciate it if you hit that like button and subscribe. We also have a free VIP group where we dig deep into different aspects of real estate and answer all of your questions. So if you'd like to join the community, click the link below in the description to get access to that. Today's video is about closing escrow and what costs are associated with closing on that property that you want to buy. If you've been, thinking of buying a property, this video will clear up any confusion that you might have. So let's get started. So what are the closing costs? Closing costs are the costs associated with purchasing a property, whether that's, personal home or an investment property. So what happens before, the escrow closes on that property that you want to buy? There's quite a bit that happens. So, you're looking to buy that bright, shiny new property on, 555 East Prosperity Drive. Before the escrow closes and these fees come up, let's go ahead and break it down real simple about what happens first. Inspections. This is when you get inspections done and you likely have contingencies. For example, we have 14 days to exit the contract if we don't like what we see in the inspection. So, the inspection is going to be outlined in detail in your purchase contract. And these contingencies need to be cleared before moving forward. They're your escape clauses. Things like, if the roof need to be replaced, we have the right to walk away from this contract within a certain amount of time. It's whatever matters to you. It could be title contingencies, financing contingencies. That's, just some examples. There's disclosures exchange, the majority of which are, going to come from the seller, and understand that there'll be differences from state to state on how that goes. The seller basically needs to disclose what's wrong with the property, and this is just an kind of an overhead view of the whole process. But the buyer sometimes has disclosures. For example, if you're a licensed realtor, some states the buyer would need to disclose that information, and any funds from the buyer would need to arrive in escrow and get cleared by the title company. And the same thing for any funds from the lender. All of the cash needs to be in escrow to be sent out at closing to all receiving parties. Property docs have to be signed, like a grant deed or warranty deed. And, this is the document that conveys the title to the property to the buyer, whether, that's you or, a company. That document gets recorded at the county the property is in as soon as the escrow closes. And there's going to be loan documents. Maybe the buyer, or is getting the FHA loan, hard money, private money, or whatever. Those docs will need to be signed by all parties prior to closing. So, that's a quick overview of some of the things that will take place in the beginning. So let's get into the actual costs associated with closing the property. What I'm about to talk about is you'll find pretty much across the board. We're talking about title insurance and escrow fees are two of the most important costs. If you're buying a property, title insurance is bought by you for the title company to give you an insurance policy that no matter what happens, the property is yours. The title company is going to get a title report that's going to have, chain of title, taxes, etc. Things you have no control over, like, liens or judgments the seller has, will also be on that report. And you as the buyer can say, I will not buy this property subject to, that judgment. Then it's up to the seller to take care of it before you buy the property. You'll commonly see on there the seller's current loan on the property. the seller will be paying this off with the cash you're buying the property with or your lender's cash. Regardless, title insurance covers you and the lender in the case anything goes wrong with the property. Your lender will have their own policy separate from yours, by the way. The title insurance generally costs about $1,000, give or take. Escrow fees. This is going to vary from state to state. In some places, title insurance and escrow are done in-house. Think, First American Title or Chicago Title. They're going to have an escrow department and they're going to have a title department in-house. So keep in mind that the escrow department is there as a neutral third party. Some people, have this misconception that the escrow officer works with the lender, and that's just not true. Escrow is there simply to see the deal all the way through and make sure everyone involved agrees to everything. They're not there to take sides. So these fees will vary based on the size of the deal. Lender fees. All these are going to vary based on your situation buying a property. If you're bringing your own money to the table, then this wouldn't apply to you. But the lender can have all types of small fees added into the deal if you're getting funding for the deal. A common one might be, an origination fee. Overall, a standard loan, though, you could expect to pay around $500 in lender fees. And a transfer tax. A transfer tax is the amount of money that's charged when a property changes hands. So most of the counties across the country have a fee to transfer a property. A standard amount is like $1.10 for every $1,000. So the transfer tax on a house selling for $100,000 would be $110. Again, this could be higher or lower. And now this is not in every state, but in most states, if you're getting a loan, the lender wants to see that your property taxes are paid through the next tax collection period. So that's your prepaid property tax. You'll have to prepay interest on your loan due to your first payment not being due until 30 days after close of escrow or COE. There's homeowners insurance, and your homeowner insurance is going to be due at the time based on whatever you work out with the company that you end up going with. These are all standard costs that you should expect when you're buying a property. Title insurance, escrow fees, lender fees, transfer tax, prepaid property taxes, prepaid interest, and homeowners insurance. There's some other costs, but these costs are the most common ones. Some other possible costs are appraisal fees, impound tax, impound insurance, inspection fee, mortgage insurance premiums or MIP, and funding fees. Now, once again, I want to point out that the last possible costs I just said are related to you getting a conventional loan to purchase a property. Buying a property on your own dime does change a few things, but standard costs are standard costs either way. Now, keep in mind, everything is negotiable, even though all areas have standard rules. Think about it. If the price of the property itself is negotiable, then that means everything else is negotiable as well. It's just all up to you. It's your deal. So talk to whoever you need to talk to about these, standard costs to find ways to, get them reduced. So there you have it. If you're looking to buy a property at the moment, these are some of the costs you can expect to pay. Based on the state and even down to the county level, the property is located in, this will, change how much these costs might be for you. But now you have, an idea of standard costs to keep in mind moving forward. So I'll see you in the next video. If you found this video helpful, give it a like, subscribe, and share. See you next time.